Very good morning. It's Mark here. It is Thursday, the 16th of January, 8 a.m. Eastern, 1 p.m. GMT. That means it's two trading days left until President-elect Trump becomes President Trump, and we're waiting in anticipation to see how the markets play out. And on that note, let me just mention that on Monday, the 20th at 1 p.m. GMT, we will be doing a webinar covering just that topic, Trump trading in the new Trump era. So be sure to catch that, as I say, Monday, the 20th, next Monday at 1 p.m. GMT. That's around about the same time as today's morning session. Markets are looking good. I have put in a few extra lines this morning, taking maybe a step back from the market. So let me tell you why I've done that. Have a look on the US dollar index. Following yesterday, our EMAs did signal a cross to the downside, which would signal a downtrend following the EMAs, lower highs, lower lows. However, what's interesting to me is this ascending trend line that I've put in going all the way back to October last year. And have a look how every time the sellers do step in when a new high has been made, it bounces off this ascending trend line, which gives us a continuation of higher highs and higher lows all the way through. And we saw that yesterday as well. Sellers stepped in yesterday, got to around that 108.40 mark. Buyers immediately stepped in to bring it up. And so far today, US dollar strength has continued. Buyers in control for now. Having said that, we have noted over the past few weeks how we often get a turnaround when the US session gets started, meaning during the Asian European session, the markets behave in a certain way. We see trends developing, and then come the US session, we do get a turnaround. So let's be aware of that. You can see yesterday, to start yesterday, there's the wick all the way down at 108.39. Buyers stepped in during the US session and ended up closing much higher, pretty much in line with the previous day. Today, so far, no wick below the open price. US dollar looking strong to start the day's trading. Let's have a look at S&P. Now, I've done something similar on the S&P, drawing in a trend line, but as you can see, this is a downtrend, a descending trend line, the opposite of what I drew in on the US dollar index. Not surprising. Why? Because as we know, traditionally we have an inverse relationship, strong US dollar, weak S&P, weak equities, and that's exactly what we've drawn in here, notwithstanding the fact that we had a big day yesterday, S&P, which forced this crossover on the EMAs, which would signal an uptrend, higher highs, higher lows. But then again, buyers got held up today at this descending trend line, which gives us a series of lower highs. And we'll see if that plays out. The markets open in Wall Street will get started in 1.5 hours. So we will watch and see if that inverse relationship continues to play out. Commodities. Gold, pretty much relentless, showing so much resilience. From down here, when sellers were able to break below this 2,600, which has become a relevant level, buyers did step in at 2,584, and slowly but surely we have seen buyers maintain in control higher highs, for the most part, higher lows, one or two exceptions, but buyers are in control. 2,700, where we're sitting right now, 2,700, tough level to break through. It's tried this area, even though it got as high as 2,728, but when it gets to just above this 2,700, it has been a tough level to break through. I think what gold buyers will need to break comfortably above this 2,700 and then above this 2,724 will be a return of the inverse relationship between US dollar and gold. We aren't seeing that right now. Now we're seeing gold and the US dollar in the same direction, but I think that'll come to that could well, once we get to a resistance area here, it could be the US dollar that controls the direction of gold. Brent oil. Which has been really interesting. Look at this. I mean, yesterday, Brent oil from setting intraday, daily, should I say, support at 78.58, rallied all the way back up here to the $81 level. Today, so far, sellers have been in control, and it's come from 81 down to 80. That's where we're sitting right now. The trend is still up. It's moved that $1. Sellers will be looking to trade below the $80 level for continuation of what has started today. Buyers, of course, will want to bounce up off this level and again look to test the $81 level. But look what happened yesterday. Yesterday, this was a big red candle all the way down here to that $78.50. And then in the US session, came back strong oil, rallied all the way back up here to that 81. Today, even though it's been as low as 79.66 right now, are we going to see a similar pattern to yesterday where buyers step in like they stepped in yesterday and revisit the $81 level? Bitcoin. Bitcoin over here, why I've drawn in the descending trend line, showing an big picture, of course, but showing an inverse relationship at this point with the US dollar. Strong US dollar. Does strong US dollar relate to weak Bitcoin? Is that the relationship? A relationship which is pretty new, so still forming, but that's what I'm seeing if I draw in this descending trend line. Buyers are strong. Buyers took it up here to the $100,000 mark again, but so far today, sellers have stepped in at the $100,000 mark, brought it down as low as $98,500, and now possibly buyers looking to maybe, let's just zoom in for a minute to that hourly. There you can see it is down. Buyers have stepped in, but pretty level around this 98,000 mark for now. That's the way it's looking. Good trading, guys. Let's keep that discipline. Let's follow these trends. Remember to stick to your time frame that you're trading with. And by the way, talking of time frames, you know how relevant and important that is to me as a trader. And I will be covering time frames from an educational aspect or point of view when we do the webinar on Monday. Good trading, guys.